Hey everybody, this is Martin Mi5 back for another video. Today's video is NEO stock, and NEO stock is getting cheaper, but execution risk could cloud outlook. So let's get into this article. NEO, with a big red minus there, once hailed as China's answer to Tesla. Yes, the infamous Chinese Tesla. Definitely not that anymore. I would say it's the China's Kia now, or if you could find a lower brand, finds itself at the crossroads as investors grapple with concerns over delivery growth, execution risk, and liquidity. Personally, I am not concerned about the longevity of the battery swapping model as charging times improve across this industry. Despite recent efforts to expand its market research, NEO's trajectory has fallen short of expectations, no duh. Particularly when compared to competitors like Li Auto, I've been telling people that, and Tesla. And this is why I'm bearish on NEO stock. Remember, this article is written by James Fox. Don't come freaking attacking me. I know how you guys get. Let's start by looking at NEO's third quarter results from 2024, which, all things considered, were rather disappointing. The company reported revenue of $2.66 billion, slightly beating analyst estimates despite a 2% year-over-year decline. Vehicle deliveries increased 11.6% compared to Q3 2023, reaching 61,855 units. However, the average seller price ASP decreased to RMB 270,000 per unit, a 14% drop from previous year. This was attributed to weaker product mix and increased promotional activities, while gross margins improved 10.7%, with vehicle margins rising to 13.1%. NEO's net loss remained considerable and concerning at RMB 5.1 billion. This persistent unprofitable profitability, I should say, continues to be a significant concern for NEO investors, as reflected in the company's negative operating margin over the last 12 months. It says here NEO is underperforming in delivery, growth, and competition. What's more, NEO's performance in recent years has been disappointing, especially compared to its Chinese rivals. For me, this is a big issue because the track record, both in terms of material output and earnings, is a very important gauge. While the company has seen some improvement, with Q4 2024 guidance projecting deliveries between 72,000 to 75,000 units, approximately 44% to 50% from the same quarter of 2023. The revenue forecast once again is below expectations. In fact, NEO's Q4 revenue forecast of 2.80 billion to 2.90 billion was quite below the 318 billion analysts were expecting. Moreover, the introduction of Onvo sub-brand was intended to boost volumes. However, the ramp-up has been slower than anticipated. The company is now targeting 10,000 units per month by December 2024 and 20,000 by March 2025. That would be up from 4,300 vehicles in October. So Onvo is not really making as big moves like people thought it was going to do, apparently, and they can't keep up with the deliveries anyway. In contrast, competitors like Li Auto have shown stronger delivery growth, leading to some questions about desirability of NEO's vehicles. Tesla has also cemented its position as a dominant force within the sector, while BYD has grown sales at a rapid pace. NEO's battery swapping technology, a double-edged sword. Compounding these concerns about growth and profitability is my concern about the long-term viability of battery swapping technology. As charging speeds for electric vehicles continue to improve, I'm increasingly concerned that battery swapping may become obsolete. This technology, while innovative, requires significant infrastructure investment and may limit NEO's flexibility in the battery design and vehicle architecture. That's why they said NEO is the first to come up with this battery swapping. You never want to be the first at anything. It's better to be the second or third. Trust me. History will show that I'm correct. The company's commitment to expand its battery swapping network through, I don't even know how to pronounce it, Xiantong program aims over 1,200 counties across China by June 2025. However, the cost is vast. Although these battery swapping stations can become revenue generating assets, they could also become costly assets to maintain, and that is the main point of that. Concerns over NIO's financial health and valuation. I'm also concerned about NIO's financial situation. Despite being free cash flow positive in Q3, the company's working capital declined approximately $370 million. With about $6 billion in cash and investments, NIO has a buffer, but ongoing losses and expansion plans may necessitate additional capital raises in the future. My cash concerns are compounded by uncertainty about NIO's strategic direction. While the company has its Envo brand and plans to launch a Firefly sub-brand to capture mass market share, I believe it would be better to focus on strengthening the NIO brand itself and managing costs effectively. Prioritizing the core could lead to better financial stability, a more coherent strategy moving forward, and reduce execution risk to some extent. From a valuation perspective, NIO trades at 1.02 times forward sales, representing a 9% premium to the consumer discretionary sector. However, this is a modest discount to some peers like Lee at 1.12 times. Nonetheless, Lee is already profit making and sits at a strong net cash position. I'm not convinced that the discount is large enough to make NIO look attractive versus its peers. It's not to a lot of people. Is NIO stock and buy according to analysts? On TipRanks, NIO becomes a moderate buy based on 8 buys, 5 holds, and 1 sell. Rating assigned by analysts in the past 3 months. The average NIO stock price target is $6.23, implying a 29% upside potential. $6.23, good luck. It can't even break past. NIO can't even get past $5. Why? Why is that? The bottom line on NIO stock. While NIO's share price might be getting more attractive on a relative basis, deeper dive reveals several concerns, including a history of underperformance, continued losses, devaluation that could arguably be discounted. Personally, I'm also concerned as to whether battery swapping is the future in light developments and charging technology. As such, I'm bearish on NIO and instead have preference of profit making and cash rich Li Auto. So you see this bear bull here. So let's take a look at what NIO's doing right now. So just look here. This is Monday the 25th, 3:20 p.m. here, and it's at 467. Okay. Let's see what it was at the beginning. It was 481. For the week, it was 486, 482, 45. When did I buy? I must have bought down here somewhere. Lower than that, actually. See, I bought somewhere around this time. My average cost is $4.57. I was up like $13. You can see here now I'm only at a total return of $5, which is pitiful. You know what? This stock, it just seems like it's not going anywhere. It's just going back and forth like a ping pong table. It just cannot break $5. I don't know what. Well, if you listen to the article, NIO has made a lot of bad decisions. They're trying to create all these sub brands. They're just burning cash like crazy. They're just not focusing on one particular thing. They're trying to use the shotgun method and trying to throw everything at the wall and see what sticks, and nothing's sticking. That's the problem. They don't have a clear, precise direction. They don't really know who they are as a company. That's what's going to hurt them. It's hurting them now. Yeah, everybody says, oh, the cheaper NIO gets, the better. It's getting cheaper and cheaper. Yeah, you know what? It could go real cheap. And guess what? It's going to stay cheap. and you're never gonna see that profit from your stocks. You want to just stay at $4? What good would that do you? If you got 10,000 shares of NEO at $4.50 and it stays that way, good luck. I mean, you just want to hold a stock for 10 years or whatever it may be. But we have to be optimistic about this, and let's see what it's going to do long term. I mean, this is still short term, so let's not get too excited about it. And like I said, I'm just relaying the information of the article and bringing up some valid points. You could look at it the other way, that buying a bunch of shares now would be great if NEO ever gets their butt in gear. Then you will make a profit, obviously. But if they don't, then I don't know what's going to happen. If they go bankrupt, I don't know what's going to happen to your guys' money. I really don't. And I'm 50 shares in, but that's a small position, and that's about all I'm going to do right now. I'm not going to be taking the big chances putting in large positions, because it has not shown me any sign of confirmation that it's going to continue to go up. Quite the contrary. Now, this would be good for day trading, making money out these fluctuations. 481 here. I mean, you could have bought at 458, sell 481, buy at 466, sell 486. I could have very easily done that, but I have my sights set on other stocks that are actually making me money right now, and SoFi is one of them. But let me know how many shares you guys have. What's your average cost? How long have you been holding? Are you bag holding? Let me know all those things in the comment section below. So that's it for this particular video. Make sure you guys like, comment, subscribe, click that notification bell so you guys will be notified of my daily uploads of NEO videos and also other entrepreneurial videos showing you guys how to make as much money as possible. And who knows, the more money you make, the more NEO you can buy and quit that job that you have that you absolutely hate. So that's it for this video. Thank you so much for watching, and we'll see you on the next one.